Welcome to the Wholesaling Inc. podcast, America's #1 podcast for new real estate investors, where we know that finding discounted property is the most proven path to financial freedom. I'm your host, Brent Daniels, Mr. TTP, Mr. Talk to People, and I will tell you this right now. If I can do this business, so can you. So let's get started. This is going to be an incredible conversation today with a local legend here in Phoenix, Arizona. He's been doing this business since 1993, and I think that this is really interesting, and I think it's really important that we have conversations with unbelievable real estate entrepreneurs that have been doing this for a long time, that have been through the cycles, that have seen the good, seen the bad, have done flips, have done wholesale, have done creative finance. It's my pleasure to bring Jon Burgher here. Jon, how are you?
Thanks, Brent. I'm excellent today. Glad to be here. Thank you so much.
31 years.
31 years.
You've been a real estate investor, entrepreneur.
Yep. I'm not licensed, just an entrepreneur.
And 1993.
Yep.
You're like, hey, I should probably own some real estate.
I had a wild hair. I had a family friend that was a realtor here in town.
Yeah.
One of the main brokers with John Hall and Associates at the time.
Yeah.
Said I wanted to buy a rental, and he came back to me and says, I found one for you, a little triplex over in Mesa. I went, great. And it was a situation that it was a seller finance deal. Where the older couple needed to have some money, so they just carried the note for me. It was about $10,000 down. I didn't have $10,000 at the time.
Right.
I told him, Dale, I had 5.
Right.
He says, okay. Calls me back an hour later. He says, John, you just bought yourself a triplex. I went, great, for 10 or for 5,000? He says, no, for 10. I went, Dale, I don't have it. All I have is 5. And he says, no, you don't. I'm going to carry the other 5,000, $50 a month till it's paid off in full. And that's where it all started. And it all started with creative financing.
Do you still have that property?
I do not. We sold that in 2005.
Why?
The market went crazy, and we had built a portfolio up to about 120 rental properties.
Yep.
And it was a school of hard knocks. You didn't have podcasts like this. You didn't have the internet. It was, I learned everything from scratch, and Dale wasn't much help on that side of it because he was a licensed realtor. He wasn't a landlord.
Yeah.
But we built up that portfolio, and I had it for several years, and then the market started going through the roof here in Phoenix, as some of us know, and we started selling off that portfolio, and it was one of them that I did sell. I bought that property for $61,000, and a cool little story. We bought that one for $61,000. About 2 years later, the old couple came to us and says, hey, we need to have our money out. I need some cash. Well, there's a little clause in the seller finance you always put in there that you have first right of refusal.
Yep.
And so we did, and it was a $20,000 savings. So now I got a base is about $41,000. And so we went out and did a refi on it and took over the property. And then about 3 years later, we did a cash out refi. And of course, on cash out refis, if you take that cash, put it in your hip pocket, there's no taxes on it.
That's right.
Because your tenants are paying for that note.
Yeah.
So we did that. And then several years later, in 2005, I believe it was, we sold that property for $214,000.
Awesome.
So it was great. Had cash flow all those years and had a great return.
So are you buying rental properties, letting appreciation do what it does, and then pulling out some of the equity to buy more real estate?
Yes and no.
Okay.
So Dale taught me how to do creative financing starting back in 1993, before everybody really even talked about it, even though this stuff's been around for decades.
Yeah.
He taught me how to do sub-2 wraps. He taught me how to do seller financing. He taught me how to do hybrids and all that kind of thing. So that's how we buy most of our properties. We will pay cash for some. I'm all about cash flow. That's what I want is the cash flow. I really don't look at the appreciation.
Yep.
Right now, we own in 15 different states. A lot of those states are Indiana, Ohio, Georgia, back east, where you can get a cheap property, but the cash flow is great. So it's really not about appreciation. So the whole idea behind it is the cash flow, putting the mailbox money in your hip pocket and living off of that. Now, we take some of that and live off of, but then we take some of it and reinvest it. Now, you said something about refinancing. Yes, when we bring private money investors in, which we do a lot of, we'll let it season, then we'll turn around and do a DSCR loan, which is a special bank loan that you can get where the property stands on its own. and then we'll take our private money out. If we can get cash out, great. We'll take that cash, put it in the hip pocket, or reinvest it. But at the same time, we hang on to that property. I usually don't sell property very often. I want more and more in the portfolio.
Yeah, sure.
But then we do that DSCR loan, got a 30-year note on it, and keep going with it. And then we do something a little bit different, though. So we turn around, and I am not a landlord anymore. Landlording is not the way to go in my mind. We do lease with option to purchase.
Yep.
We make the lease person a pre-owner of the property. And as they work through their lease and get to that option scenario, then we turn it into seller financing, and my company becomes the bank for them, so that they don't have to go to the bank and go through all the loopholes of that. They do have to get qualified through the SAFE Act. We do it that way.
Yep.
Some people know it as the Dodd-Frank laws. But then we turn around and we do a wrap around any underlying note that we have. But the whole idea is to become the bank at the end, and we hold the note.
Okay, we're going to unpack that, and I'm going to go back
Go
to
for
like we're 10-year-olds getting this explained, because that's the way that I need to understand this. So this audience, Wholesaling Inc., we're going out there, we're finding property owners that want cash for their deals. Now, sometimes we talk to them and they don't really, that they're not ready to sell, or they don't want to take the hit on their personal income taxes from selling, or they just, they don't really want the hassles of being a landlord anymore, but they're not really sure on how to be a bank. So educate us real quick on the conversation to have with a property owner that we go in cash as is, cash as is, cash as is. Their price is too high. How do we make that transition?
Sure. So we do the same thing. So I have an acquisitions team that works with me. The first thing we do is we do go in with a cash offer. It's usually really low, just like most wholesale deals are. And a lot of times they will tell you no. If it's a situation where, and they can have a lot of equity, they can have no equity, we may come in with a seller finance offer. And we'll come back at them and say, hey, we can come up to this price if you can give us time to pay you off in full, is what it comes down to. And we're buying terms.
I can give you your price, but it's going to be in payments.
It's going to be in payments.
Yeah.
Yep. All day long. So, and a lot of times they don't like that either. And that's what we really try to go for. And you got to entice them by putting some money in their pocket, and then making payments on the rest. If it's a scenario where there's no equity in the house, it's a lot easier. Or if they're going through foreclosure, it's a lot easier. But we get homes that they have a lot of equity, and then we'll try and turn it into seller financing where they become the bank, still put an okay down payment to them, and start making payments to them. If it's not their personal house, maybe it was an investment property. Now it's a tax benefit to them because they don't have to pay capital gains all at once. They will have to spread it out.
So I call somebody up. I say, hey, Mr. or Mrs. Seller, would you consider an offer on your property? They say yes. I go, okay, the way that we purchase properties is cash. It's as is. You don't have to do anything. We pay all the closing costs, everything. Here's a net offer. We meet with them. They want more. Or, we pull out at some point as we're having a discussion, we look for the 4 pillars of pre-qualifying, which is the condition of the property, their timeline to sell it, their motivation, and their price.
Sure.
And if their price is too high, you're saying transition into, hey, listen, I can give you some cash now, but let me take over your loan. Let me add another loan to this property that you're the bank now, right?
Possibly,
you
yes.
You would put a note on it if it makes sense. If the cash flow makes sense.
Yep.
And then you own the property.
Correct.
Right?
Yep.
And they sell it. They don't have to deal with it. But now they have a note on a property. They have the cash on the property. But they still have their credit attached to the loan.
If you do it as a sub-2 wrap, that is correct.
Right.
They do.
And so that's what a sub-2 wrap is.
That is correct, yes.
How often are you doing those?
2 or 3 a month at least.
Really?
Oh, yeah.
And people are fine with you taking over their loans?
Yep. They're usually in some type of trouble, some type of desperation.
Who should we go after for these deals?
No equity.
Okay.
Houses is huge.
Yeah.
Because they can't hire a realtor to go sell it for them without coming out of pocket. Foreclosures is another one that works great. I know there's a lot of people going after foreclosures, but a lot of times they're just offering cash. They're not trying to structure it. A lot of times, the whole idea behind the sub-2 wrap, I know some people do just straight sub-2s. We actually wrap it. So our sellers are actually getting a deed of trust and a promissory note. So if I default on it, they have a way to foreclose on me. The other way to sub-2, there's really no protection for the seller. So we really want to protect our sellers when doing that.
Yeah.
So when we start explaining that and they start understanding it, it's a lot easier sale.
Yeah. And how long typically do they stay on there before they start getting a little wiggly, a little itchy about having their loan on this property? It's going to reduce their ability to buy something else because of debt to income ratios. It's also like, there is some risk to put, that you might not make the payments, even if they can foreclose.
Yep.
It's still a ding on their credit if there's missed payments.
Yep.
Is there a certain amount of time? I always wonder about this, and I always like asking this question. Is it after year 1? Is it year 2? Is it year 10? Like, where do you find that they start giving you the call? Hey, listen, can you just get me out of this?
So honestly, most of our stuff is to the end of the term of their note.
Okay.
We don't put balloons on them.
Right.
Occasionally we'll have to, but I would say a handful. That's it. The rest of it is to the end of the term.
Right.
Now, we will help them go get their second house when they're ready to do it and get that debt to income ratio off. If you use certain mortgage brokers that know what they're doing, on rentals, they'll usually take 75% off.
Yep.
The way we do it, a lot of times we can get 100% taken off for them. So usually that's not an issue. And once we explain that to them, if they want to go further, we'll hook them up with some of our mortgage brokers to talk to. So that helps them. So it's not a concern. Some of the biggest concerns is if you're dealing with a VA loan. And you might lose some of that VA benefit. Yeah. So that does happen.
Can you only have one VA loan?
I don't know.
At a time?
It depends. There's so many rules with the VA. I don't get into it. I send them over to our broker and let them deal with it.
Got it. Your mortgage broker.
Mortgage broker.
Okay,
Correct.
got it.
Yep.
Why not flip houses? Why not make the big money, John? Why not get that millionaire money? Why not get that, flip some properties, wholesale some properties, get that lifestyle money,
it's funny. So my organization is big enough that the first thing my guys do is they try to take it down and put it in the portfolio. I like the mailbox money. I like that residual coming in. You're getting appreciation. You're getting depreciation.
Yeah.
You're getting the principal pay down. Plus you're getting a monthly cash flow. So you're getting multiple benefits. And there's several other ways to make money off those too. Is it get rich quick? Nope. It's get wealthy slow.
Right.
And I truly believe that wealth is not how much money you have, but how much time you have back to spend with your family, your friends, and do what you want to do.
Control.
Oh, total control.
Yeah.
No longer that 9-to-5 stuff.
Yeah.
So I have done some flips. Honestly, every flip I've done, the budgets have never come out right, and I don't like managing all the contractors.
Right.
So that's just me. Wholesaling, because we have so many deals come through, if we can't buy it and it doesn't fit in our portfolio on a cash flow basis, we do turn around and sell them back off with novations, or we will wholesale.
Cool.
And yes, that's actually what operates the company, and that's how all my people get paid. It's not
How
off
long
of
have
the
you been
mailbox.
doing novations?
I've been doing novations, so that's funny. I used to have a partner, and he came to me one time and says, John, you got to see this new strategy. So he started explaining, and he says, a novation. I said, what the heck's a novation?
Yeah.
And he starts explaining it to me. So we walk into our TC. And I said, hey, explain that to Trudy. See what she says. And he started to, and she says, we're already doing these. And we had been doing it for a long time.
Yeah.
I don't know when we started doing it. It's been a long time ago. It's just paperwork.
I mean, are you talking, you've been doing it 20 years? You've been doing it 10 years?
Probably 15 years.
Because
on
it literally is like in the last 3-4 years.
It's really got hot.
It's known, but you've been doing it a long time.
Long time, yeah. Yeah, no different than Sub-2. Sub-2's been around for decades.
Yeah.
But it also got hot, in the last, 5-10 years?
Well,
5
you
years?
see, when the interest rates increased, Sub-2s became very, very, very popular.
Very popular.
Because it's, to get those, that low of interest rates again.
Yeah.
Good luck.
Yeah.
Have you ever seen that low of interest rates in 31 years?
Never.
You think it'll come back?
No.
What do you think it'll sit around?
I'm hoping that come election time, it'll be in the low 6s.
Okay.
To see it back in the fives, I don't know. What's your opinion?
Listen, I started in 04. In 04, it was like 7%. It was like 6-7%. They had a lot of really creative type of loan programs there that we talked about before the show. But, I think that, anywhere between that 5 and 7% is what people should assume.
Yeah, that's what I'm thinking.
But that's what makes creative finance so exciting, because you could literally buy something with 0% interest if you're just making principal payments.
Yep, and we do quite often when it's seller finance stuff.
So when you started, what was your profession? How did you have any
I was actually in the jewelry business.
Really?
Yeah, but my family was entrepreneurs and so forth, so I just knew that I wanted that monthly cash flow.
Yeah.
I wanted that residual coming in. So if you got enough residual coming in to make your nut every single month,
yeah,
to me, you're wealthy. Now you no longer have to
How'd you know that? Because that's like financial literacy that really doesn't get talked about at a lot of dinner tables in the family. Was that talked about in your family?
That came from my mom. Yeah. So my mom and my dad died when I was 2.
Oh, man.
But he had just started up a heavy haul trucking company back in Iowa.
Okay.
And when he died, she ended up running that company and ran it for multiple years. So that's where I got my entrepreneurship.
Yeah.
From her.
Really? And she was like, "Hey, listen, get your costs covered."
Mm-hmm. Pretty much.
Was there ever a conversation of, "Hey, don't let your costs go bananas"?
Oh, yes.
Talk to that. Yeah. Talk to that, because this is a different generational talk. You know what I mean? Like,
yeah.
I don't know if I had that conversation growing up. I mean, it's common sense on some level, but once you, as an entrepreneur, and especially if you're in sales or if you're in real estate and you figure out some flips, you get some big checks in.
You do.
It breaks your brain. Your financial thermostat might not be set high enough, and then you give it all away because, one, you don't feel like you're worthy, or you just feel like, oh, I made it. I could buy anything for, and I got to impress everybody, and it's fun.
Keep up with the Joneses.
Right. Yeah.
Yeah.
So what was the conversation your mom had about keeping your costs low?
She did the accounting and stuff for the trucking company.
Yep.
So I saw all the books and the P&Ls and the balance statements and so forth. So that's where it really started. And just watching what she had to do of her expenses and income coming in. And then, she talked to me about credit cards and all that kind of stuff. I'll never forget, I was 14 years old. I wanted a brand new car. She made me go in and talk to the banker. And that banker had to sit down. Of course, I grew up in a town of 3,000 people, so everybody knew each other. So it was one of those things that it was a very hard move.
Yeah.
But I learned from a very young age that don't go in debt. Try to stay away from the credit cards and that kind of stuff.
Yep.
Unless you got a good way to pay for it, and it's going to be consistent. And don't ride the markets. Yeah. So, and I've been around for a long time, 31 years. Mm-hmm. Rode a lot of the markets. I've never lost a house in 31 years. Okay, that's hard to say for most people.
Incredible.
But I'm very, very conservative when it comes to numbers.
Yeah.
And that's the big thing. I don't over leverage.
Real quick, John,
yeah.
What does that mean you're conservative?
So let's say we're buying a property.
Yeah.
When we do our formulas, we look at the lowest rents in the area. Well, I'm not concerned about purchase price. I am concerned about what the debt service is going to be. Okay. We're going to
What does debt service mean?
Debt service is what you're either going to owe the bank, whether you're taking over that note or whether you're going to go get a private money investor to help you out.
Are you talking about the whole balance, or are you talking about the monthly payment?
The monthly payment.
So you're looking at monthly payment.
Monthly payments. That's all that I'm concerned with is monthly payment.
Okay.
So I'm going to look at that monthly payment. I'm going to take a look at, depending on how you're taking it, if it's a subject to wrap, you're going to have some extra insurance in there.
Sure.
So you got to add that in.
Yep.
By the time you get done, I look at that cash flow being at least $300.
Okay.
That's using conservative numbers. That's using low rents in the area. Now, the neat thing about lease options is usually you can get $150 to $200 over the highest rental.
Right.
Okay. And we use a couple different softwares to get to that.
What do you use?
We use Renometer.
Renometer. Yep.
Which a lot of people use. Zillow's another hot one.
Sure.
Okay.
Yeah.
PropStream also has it on there.
Yep.
So we'll look at those three.
Cool.
And we'll take the bottom one to do our conservative numbers. Then we'll take the highest one, and then we're going to add another $150 to $200 on it, depending on what the market's doing. Mm-hmm. And so now that $300 grows into $500, $600, $700, $800 at the end. Mm-hmm. Okay, that's what we're looking at. Now, at the same time, we talked a little bit about principal pay down. That's when you're going to have a note you're going to take over or a mortgage you're going to take over. Every payment you make on that, a little bit of that payment goes to buy that principal down.
Yep.
I call it a private savings account. Okay, it's equity, but it's not equity till you sell that house.
I like that.
Okay.
I like that view of it.
So, we hang on to it. I don't count that. I also don't count depreciation, okay, which is going to help you on your taxes. And I don't count appreciation because most of the markets we're in don't have a lot of appreciation like Phoenix does. I mean, we own a lot here too. So, but when it does hit, it hits good.
Yeah, John, why not buy just in high appreciation areas? This drives me wild, John. And I'm going to tell you, this drives me wild when I have incredible people in the Rhino tribe, and they go and they find some great wholesale deals. They're making $20,000, $15,000, $5,000, $50,000,
Sweet.
whatever. They're building up that bank account, and then they go buy in in Indianapolis, and they have to go through 15 different evictions. They have to go through, like in some of the lower income areas, it's a constant turnover. They beat up the properties. It's a nightmare for people doing virtual property management. Why not just buy in areas that are appreciating in really good price points, really good school districts? So that's what I was always taught. Buy in good school districts, and that way you're not going to have to be constantly putting your money into it. Why?
So we do look at school districts.
Yep.
Buying in Phoenix is very tough for what we do right now.
Right.
The cash flow's not there. Again, we're all about cash flow.
Got it.
I don't like D properties. C properties maybe, or higher C's and B properties. And what I mean by that is just the category of where that property is. If it's in low, scum areas, I don't know what you want to call them. We don't buy in those areas.
Yeah.
But we're also not landlords. That's the big thing. We're not landlords. So we're not having to take care of that property. We are lease optioning this back out.
Yep.
And the people that are coming in buying these homes are putting a large option fee on of either $10,000 to $30,000, and that's a lot of money to a lot of people.
Sure.
So now they're becoming pre-owners of the property.
Yeah.
Because they're coming pre-owners, they take pride in that property themselves, so they don't tear it up.
Right.
And that's the whole key behind it.
What's the percentage of people that go through with the option fee and buy that house?
Maybe 25%.
25%.
Very low.
So the other 75% move out.
They do.
How's the condition after that?
9 times out of 10, it's pretty good.
It is.
Yeah. We do get occasionally where they've trashed it out or a lot of junk move out and that kind of thing.
Yeah.
But overall, they're in decent condition. So
And they're doing a lease option, so you're still on title, so you're still getting the depreciation, appreciation, all that.
correct.
They're just, how long is the average option time?
So we do a 5-year lease.
5-year lease.
Yep. And the reason why we do the 5-year lease, typically they're coming in, we want to help people that maybe can't get a mortgage today for whatever reason. Okay. We don't care what that reason is, but usually it's a credit issue or it's a job issue or income issue, something like that. So typically, let's say it's a credit issue. If they have bad credit and collections, derogatories, that kind of stuff, it's going to take a year to 2 years to get that off.
Right.
Okay.
But how do you trust them to make your payment?
We verify what their income is
Okay.
and how long they've been on the job.
That's it.
Okay. Plus, you got to remember, they just gave me $10,000 to $15,000, $20,000, $30,000 down.
Right.
They don't want to lose that money.
Right.
They quit making payments. I evict them.
Right.
That's the nice thing about lease options.
Yeah.
They are truly you're in a landlord-tenant situation when it comes to the courts.
Yes.
So it's easy to get them out. If they quit making payments, we evict them.
Got it.
But they just lost $10,000 to $30,000. How many people want to lose that kind of money?
Right.
So they don't. So they always, during COVID, how many landlords did you hear were having problems not collecting their rents?
Got crushed.
We had 0 people not paying.
Awesome.
Everybody paid their rents.
Yeah.
Okay. Because they had ties to that house. And that was the biggest thing.
So are you going in and completely rehabbing the properties that you buy and then getting the lease option? And you're buying them as is.
As is. We want pretty houses. We want
Sure.
move-in ready houses.
Okay.
And we call them rent-ready houses. Now, there will be times that they need carpet and paint. Well, instead of us going in and doing it, we sell it with a grant. And what we mean by that is we'll give the tenant maybe $5,000 grant, but it goes towards the purchase price when they option the contract out.
Okay.
During that time, they're able to go in and paint the house the way they want it, put the flooring in what they want, but they're going to get credit at the end. That way they make the house their own. It's all about ownership.
Right.
So with that, we don't rehab anything.
And you're getting about 40 to 50,000 in cash flow a month.
A month, yeah.
From your portfolio.
Yeah.
Right?
Yep.
Does that go to your staff? Like, how do you pay your staff?
Nope. So my staff is all paid from the organization that actually brings all the deals in.
Right.
So we have the novations that go out and our wholesale stuff. All that influx of cash there comes in. That's what pays the staff. That's what pays all the overhead. The mailbox money all stays in my pocket and or I reinvest it into more properties.
So what do you do for lead generation?
PPC.
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 My man.
Yep.
Yep.
We've been doing that since 2019.
Yep.
We now have 2 different types of campaigns. One campaign is more targeted towards the seller finance, lease option type stuff, and as
with your
well
keywords?
as sub-twos. Keywords and just the areas that you're in.
Yeah.
Okay. Then we have a whole nother campaign that's higher end, that $200,000 to $500,000 bracket, and that's more for our novations and our wholesale type stuff.
Awesome.
But our main campaign is the buy and hold because that's what I look at is all the buy and hold stuff.
By the way, for anybody, PPC stands for pay per click. These are Google ads. So when you search something on Google, you'll see that there's sponsored ads. That's where your place. That's where we're placed. I mean, it's by far, John.
Far the best.
By far the fastest leads, the highest quality. When there's intent, that's what they call it, intent marketing.
Yeah.
When there's intent for them to search you out, it's incredible.
It's huge.
But it's not cheap.
No, it's not cheap. We have dabbled in some other stuff, some cold callers, things like that. We can never get the ROIs to work, the return on investments. But we'll still dabble. Everybody says, "Oh, we got this perfect company." And PPC is by far the best.
Yeah,
no question.
Did you read any books on real estate? Did you dive deep in that? Did you have mentors? Did you go to the seminars? Did you know what I mean?
Yeah. So I did invest a lot in different courses and stuff like that.
Yeah.
A lot of time it's high level. They're teaching at 10,000 foot level. I hated that because you get everything, but then now what do I do with it?
Right.
And you can't get a deal done.
Yep.
Robert Kiyosaki, Rich Dad Poor Dad. I mean, that's the whole philosophy of what I live behind.
Yeah.
If I'm going to buy a liability, I'm going to buy an asset first and then go buy my liability.
Love it.
And that's just kind of what I've done over the years.
Yeah.
But coaching is, if you're going to be in this, you got to have a coach.
Yeah. Yeah. What do you look for in a coach?
Somebody that's doing the business.
Yeah.
There's so many gurus out there right now that don't own a property, period.
Right. Or a successful business or one that's been around a long time. And, and that's fine. I mean, I think, when it comes to that, it's a gut feeling,
sure
right? You hear somebody, you either turn them up or you turn them off. That's what Tom Kroll, my mentor, who started this podcast, always told me. He's like, I was like, Tom, I don't know how to do a podcast. Like, this is 2017. He's like, I don't know how to do this. He's like, listen, be yourself.
Yeah.
Be curious. And if they don't like you, they'll turn you off.
Yeah,
if they like you, they'll turn you up. So that know, there's your options. So
there you go. I like that.
I think when you're looking for either a local mentor or somebody that you can really connect with and really hold your hand with, at least understanding, feeling comfortable with the paperwork and the process and the connections and the network, it's so critical.
It is.
It's so critical, and it just saves so many steps because a lot of those steps. Not to hype up coaching, that's not the intention of this, but this has been my experience. It's creative avoidance.
Yes.
Right? When you're like, oh, well, I gotta go through this paperwork and I gotta go look and see. Let me get the reviews for the top escrow officer for investing and all this other stuff, and you go down the rabbit hole instead of talking to actually property owners that have a problem.
Yeah.
You know what I mean?
Yeah.
That's
When I started this, Dale Hillard was my mentor.
Awesome.
He taught me how to do the deals and all the creative stuff.
Yep.
But we bought rental properties at the time. He didn't know anything about landlording, and that was hard knocks. I would much rather pay somebody that's been doing it than trying to do the hard knocks again. On anything.
Yeah. Love it.
So
I love it. So when's enough? How many properties are you going to buy? I mean, you got 40 to 50,000 in passive cash flow. You can certainly live off of that and invest some, or just go crazy with it.
Right.
You've got novations. You've got wholesale. I assume you have some other streams of income.
Oh yeah. It's one of those things. It's My wife says I can retire when I hit 65.
Okay.
Well, I don't know if that's going to happen or not. I'm a workaholic, but I enjoy what I do.
Yeah.
That's what's fun. That's why I've been doing it for so long.
What does that mean, you're a workaholic? Like, are you going 6 a.m. to 9 p.m.?
Sometimes, yeah. I mean, I'll go into the office. So I was trying to semi-retire here a couple years ago, and I'd come into the office 2 or 3 days a week. But even when I was gone, I was on the web. I was investigating stuff. I was trying to get more education. I was trying to expand what was happening. Mm-hmm. And then I ended up getting 2 great people in our office, actually 3. One of them's gone now because now he's on his own, which is awesome.
Yeah.
And they wanted to blow the company up. And I said, if I don't have to be here 24/7 and you guys want to do this, I'll back you. Let's go. Yeah. And so they're cranking and cranking and cranking. Awesome. So as long as they're cranking, I'll keep going with them. So I don't even have a number set.
They want to blow it up like they want to make more?
They want to make more.
Which
they
means they want you to spend more on Google?
That happens sometimes.
I mean,
that does happen.
If you want to crank up a business, it doesn't crank up without leads.
Yep, exactly. Yeah, we just keep throwing $5,000 at it every time and just keep building it up. So that's what we've done.
Awesome.
And they keep adding to the staff. We just moved into a new office here in May because we outgrew the other one. So I'll keep backing them.
What do you think? And I'll give you a little bit of time to think about this because I'm just kind of throwing this out at you, and it's kind of a broad question. But 31 years, what do you think people that are just starting this business should know and should expect about this business that you've learned over 31 years? You know what I mean? Something that is just fundamental. You know, this is something that is guaranteed it's going to happen or not happen, or you know what I mean? Just like, whether it be the market, whether it be pick a lane, whether it be, you know, if you don't want to be a landlord, don't get into it because you'll hate it. Whatever it is, you know, whatever wisdom that you have, what do you got for us?
It's not get rich quick.
Okay.
Okay. If you do get a couple big pops, that's awesome. Don't go blow it. Mm-hmm. Make sure you take a good third of that at least and throw into your marketing.
Yeah.
Because marketing will either make you or break you. Mm-hmm. I highly believe in stay in your lane. I get a lot of people wanting me to do different things, and I know where my lane is. I know it works, and I stay in my lane constantly. So stay in that lane, pick it. Once you find it, pick it and stay there. Yeah. That's my biggest thing.
Awesome. And for somebody that's looking to get their first deal, what instruction would you give them? You're coaching everybody right now on how to go out. They have $0 budget. Okay. This is all grit. This is all hustle season. This is all being in the dirt, going after it. How would they go out and get a deal?
Get on the phone and start talking to people.
That's it.
You have to be on the phone, and I preach
Would
that
you call agents or owners?
I like going direct to owners.
Okay.
Because I do creative, going through agents. Now you have a gatekeeper.
Yep.
That gatekeeper a lot of times doesn't know what creative even means,
right,
and they will never take it to their client. We like to go straight to the owner of the property and go from there. But you have to be on the phone.
Awesome.
Have to be.
Jon, you just came out with some coaching of your own.
We did.
Talk to me about it.
I said I'd never be a coach, and we did a lot of coaching in our office.
Yeah.
But people would come in, want to learn what we do, that kind of stuff. I love doing the one-on-one stuff. I never wanted to put a course together because creative is so detail-oriented that there's no 2 deals alike.
Yeah.
And to build that out, it's very tough.
Yeah.
But my staff and some other coaches came to me and says, Jon, you really need to get this out there. You've been doing this too long. Mm-hmm. They need to know what you know. So we did. We came out with a course. It's Jon Burgher's Mailbox Master class is what it is.
Spell your last name because
it's Jon Burgher.
Yep.
And you can find me either that Instagram handle or on Facebook or on YouTube.
Yep.
But we do have a class out and the coaching. What it is we there's our course has start to finish. There's like 24 modules in it.
Yep.
You have all the paperwork. You're going to have the scripts for the acquisitions. You are going to have your contracts that you need to do creative and wholesales in there. You're going to have how to structure the deal. That's huge on how to structure the deal and the right formulas to use. You're going to turn around. We're going to take you clear through dispo, how we pre-market the properties, before we even sell them. A lot of times we'll have our tenants already, and we'll already have that option fee in our hip pocket before we have it bought and actually closed on. We'll teach you how to do that lease option side of it. Then we're also going to take you all the way through and show you how to be the bank at the very end and be the get that mailbox money in your hip pocket. That's what it comes down to.
Mailbox Mastermind.
Mailbox
Right?
Mastermind. Yep.
Yeah, I like that. That's awesome. Guys, check that out. Check out Jon on his Instagram. And I assume you have a link tree there that's got all the information for everything there.
There is.
So
Yep.
absolutely incredible.
And
Absolutely incredible.
we actually give a half-hour coaching call for free.
Sure.
Just to get what you guys are looking for, that kind of stuff. You can book one of those also.
Awesome. Jon, so great to have you on here.
Yeah, it's been
Thanks
a
for
pleasure.
being in
Thank
here.
you so much.
This is awesome. Thank you.
Yep.
Guys, a couple things that Jon mentioned. Pay-per-click at talktopeople.com. We are the absolute best. I stole some guys from Google, and we are going absolutely bananas with our pay-per-click. So if you are in a position where you've got a decent budget and you're looking to get inbound leads, go to talktopeople.com. And as always, if you're interested in learning how to wholesale, how to really build that momentum in your real estate business, go to wholesalinginc.com. Check it out. Apply now. And that is it. What an incredible conversation with massive 31 years. So good. So good. Absolutely incredible. So that's it, guys. If you like this, hit the like. And if you're watching this on YouTube, hit the subscribe. And that is it. I close out this podcast, as I always do, encouraging you to go out there and talk to people. I love you guys. I'll see you next time.